Good morning, everyone, and welcome to Tuesday. It is September 21st. So 9/21/21. How's that one for numbers there? Boy, I tell you what, this is what we call trading. Yesterday, the Dow was down almost 1,000 points, and the NASDAQ was down. I mean, yesterday it just blew through levels, key support levels, like a hot knife through butter, I guess is a good way to say it. But if somebody was to ask me what trading is or what is trading, the stock market, boy, this has got to take the cake. I fared relatively okay yesterday. Not a whole lot of damage was done. I had my SPX trade open up, was quite a bit down. In yesterday's spike up, I was able to recoup some of my losses on that. Still finished red, but then I had a short on BA, and my trade on BNTX did rather well, and so we closed that out, took profit late in the day on that, and our BA trade and our Walmart trade. We were long on Walmart. Actually, it held the level of 142, and came back from that a little bit. So overall, we squeaked through yesterday. Well, I'll tell you how we did trade yesterday. So I'll tell you how we did that here a little bit in later in the video. But for now, let's do some housekeeping, and then we'll get into our pre-market prep and kind of show you what trading looks like in my world. And so with that being said, everyone, hey, my name is Rick Kaufman, and um, I am a trader, and I'm an older trader. I'm rather risk adverse. Number one, I am not a financial advisor, nor do I give financial advice, and anything in these videos should not be misconstrued as financial advice. These videos are part of my trade journey. They are part of my trade journal. They are for my education. I believe that pre-market is one of the important parts of the day. In my trading system, I follow a very strict trade plan. Like I said, I am risk adverse, and I do not like to lose money. So I have no problem stopping out of a stock. I am not married to any one stock or any one setup, but I trade the setups. I have faith in my setups for the most part, but it's a challenge each and every day just to control the emotions and the emotions that goes on within the stock market and what the market does. At the end of the day, I don't know exactly what the market's going to do. And many times I am wrong. Yesterday, I think I was kind of, if you watched yesterday's video, I think I was pretty much spot on what my analysis was for the day. And and the carnage was a little worse than what I actually thought. But I'll kind of recap my thoughts on that a little bit here. But I trade my own money, so I lose my own money. And you have to understand that stocks have risk and options have risks, and they may not necessarily be suitable for everyone. And on top of that, future, past gains should not be misconstrued as consideration for future results. So again, history does rhyme, but it does not necessarily always repeat. September, we are in a season of what we call seasonality in the markets. September typically is a pretty down month. It's usually one of the worst months of the trading year, and October is right up there with it. So, and we've gotten to start off here towards the last week in August into September, and we've been seeing quite a bit of downturn. We've only had about 5%, maybe a little over 5% total downturn or pullback on this market. And typically, a correction isn't considered a correction until you get 10%, and maybe more 11, 12, or 13%. But so we have more downside to go. So I'm not looking at this as by no means this bounce that we're seeing here this morning in pre-market. I kind of feel like this could be a fake out, a big bad bear trap, and setting up for us bulls, and possibly, or a bull trap, I guess you could call it. And but the markets pulled back to certain key levels after they broke those levels, and that's kind of where we started this morning off here. The VIX is still relatively high. It's at 2290. It hasn't, it's been it's pulled back there at the end of the day and continue to drop, and has been holding at 2290. Like to see the VIX drop below 20 here in pre-market. If the VIX does not, in my opinion, if the VIX does not pull back and to that level, matter of fact, let's jump over to the VIX on my charts and let's look at this here. The VIX popped way up here yesterday and hit just below 29 at 2880, and typically when we look in the past, that's pretty much what the VIX does. It pops up and pulls back. So that's what we've got here, but we are still, like I said, we are right along this trend line right now, and so we'll see if we can get back below that. And so, that's where I would like to see the VIX come down to. I would like to see it get below this 20 line. Not real sure if we'll get there. We've got a lot of momentum to the upside. And like I said, this is by no means over if the VIX stays up at these levels here. And if it stays above the 20 line, there are there's more carnage to come. So so if you miss an entry, I know for me, I am going to be very, very cautious on my longs. I'm not real sure, that I would jump in and short anything right off the bat, because it's really kind of anybody's guess of what this market is going to do. And this market is something that is tough to figure out. And so that's why I call it. So this is trading, and trading is exactly that. It's a mind game, it's a mental game, and the markets are going to do what the markets are going to do. So this will be one of the most important charts that I'll have up, and I have it over here on my left side. The put call, or the ticks are the other part. And when I look at the ticks here, the ticks yesterday stayed below the zero, the neutral line, pretty much all day, and they didn't start. And the buyers came in roughly a little about 1 o'clock or so, but the last 20 minutes of the market, the buyers came in strong, and we finally got some ticks over 800 and up into 1,000. And so where we were seeing, we had an opening tick, a record-breaking opening tick yesterday of a negative 1,803. The sellers came in yesterday morning, so I'll be keeping an eye on this to see what the market does at the open. If the ticks, I'd like to see the ticks stay up there. But if we turn around and drop down in the ticks in the morning, and we go negative 800 to negative 1,000 right at the open, and then if we see a pop in volatility in the VIX, and if we're sitting in any position right now, long, then we may have just got ourselves trapped, and so we get caught. We got ourselves caught in something that we may not want to be caught in. So cash is a position, but this is trading, and some of us get a natural high off of something like this. But again, looking for high probability trades, looking for trades that will pay off at the end of the day, and that's um, you know kind of what I'm looking for. Just quick pops in volatility, quick drops in price, or pops in price, and in and out, and take your profits and run. And might be a wise choice today. So, with that being said, let's go ahead and jump into the Dow. When we take a look at the Dow, it's pulled back. It pulled back below its weekly 21, and we hit a -1 ATR on the weekly chart. But this is yesterday, so this is a 1-day bar on the weekly chart with the with part of today in there too. So this is something that we'll want to keep an eye on, because we're right at the 21. But I want you to I've noticed something here, right here back in June. This was the last when we had our last roll date, SPX roll and everything. This right here, the 21 took a little tick downward, and we've kind of have the same tick flattening out here that we did not see it here. We did see it here a little bit, and we did see it right in here where it leveled off. So this could be, if we'll see how this week shapes out. This is going to be an important week as far as the markets are concerned. So if we can hold this level and hold this 21 and stay above here, then then we may start to push a little bit higher. But again, this is something that we want to keep our eyes out for and keep an eye on, and just see where we are on this. But this is a pretty key level, and we need to get back up to the 21 on the daily 21. And but there's going to be a lot of resistance right here at the 34,800 roughly, and that's going to be a really, really tough you know price mark to, if you're looking at that. So, we got, say 38, we'll call it a key level of 3850, but that's where we need to see and get back above the 20, the daily 21 and the daily 50, because we have neutral stacked EMAs on the daily. And so this is, we do have a buy signal that's firing here on the, on my ready aim fire. And so let's see what we have on the intraday chart. The intraday on the 15, 30, 2 hour and 4 hour, we have some buy signals that are holding up here. Our 2 hour chart, we've got a downturn, and our 30-minute chart and our 15-minute chart are showing a downtrend. So price may go down a bit on this here on the short term. So hopefully we'll drop down, and we'll get another fire down here as it pulls back to the mean on our short-term charts. And it's holding here above the 21 on our 2 hour, and we're closing in to our 21 on our 4 hour. So I want to see the 4 hour get above the 21, and the 2 hours stay above the 21, and obviously our 30-minute and 15-minute all to stay above the 21 for its time frame. But like I said, the VIX is going to be a very important part, and the ticks will also play an important part in the day. So that's how I see the Dow shaping up, and what I would like to see it do for the day. The Russell, a lot of people aren't paying attention to the Russell. I drew in some trend lines yesterday, and because the charts were looking rather busy. Obviously, I have the Keltner channels, and I took off the Bollinger Bands because at this point in time, we're not really showing it. We have a weekly squeeze, and we have on our intraday charts, we do not have any squeezes on our intraday timeframes. Our 4 hour is right at the 21. We are above the 21 on our 2 hour, and the same thing with our 30-minute and 15-minute. What I'd like to see here, this level of 21.89, I'd like to see it hold if we were going to go higher. Not real sure. I mean, the Russell is probably the weakest one of the bunch, but again, it's something to keep our eyes on here. But when we look at the long-term trend, the long-term trend is definitely down. It's very neutral. It's in a distribution phase of this chart. So a lot of chop trading right in this zone, -1 ATR to +1 ATR. So there's got about a 2 ATR move. And so I would probably suspect to see the Russell maybe begin to push back up to this level up here to the 2265, roughly in there. And so that would be something I would see, I would suspect to see happen here. So if these, as long as our 2106 holds and we can hold that, and we don't see a drop below there, we should be fine. Now let's go into the S&Ps. The S&Ps, I put in some fib retracements, some key levels here on my with the fibs, and we've got the high up here at 45.49, and we've got this key level here. We held it at this retracement of 61.8, which was 42.88, or we'll just call it 42, 4,300 really. And that's what I wanted to see happen, was for this to get above 43.30 yesterday. And just so you know, this is where, when I saw it get above the 43.30 and push higher in the last 5 minutes, I put on an SPX a credit spread yesterday for expiration of next Monday, a 7 DTE, so 7 days, and took a $10 widespread and got about a $3.50 credit per contract on that. So and we took a small risk. We risk just let's see, we risk about 3.5% of the account of our account size on that. So on the contract. So that's what I was looking at here. I would like to see it hold this level here, this 47, or we'll just call it 43.50, and I'd like to see it hold that and get it back above the daily 50 today and close and give us a hold, which would be a close above the high of the low day. So I'd like to see this candle today close above this here. And if we get to that close, then I would feel comfortable that we would probably go higher on the day for tomorrow. I know we have the Fed meeting tomorrow. I do not believe that the Fed, well, they're starting today, but I believe that they will not come out with anything that's going to disrupt this market. If anything, they will be rather neutral, I'm sure, and probably just kick the ball down the road again. So got my coffee here too. Sorry for that pause there, but I think the Fed will probably just kick the ball down the road, and then most likely the markets will like that. So there's a lot of money sitting on the sidelines, and I'm sure if we get to that kind of move into tomorrow, and then the Fed comes out and doesn't spook the market, then I would say the rest of the week we should, we may have the worst carnage behind us, and we may come into a level of consolidation. We have the ready aim fire on the daily, so this is looking very positive. As long as we can get a fire on this and it holds that level, then I would suspect we would be going higher. On the intraday chart, very much like the Dow, on our 30-minute chart, we are trending downwards on the 30-minute chart and also the 15-minute chart. Pulled back to the 15-minute 21. We are above the 30-minute 21. We are holding just above the 2-hour 21, and hitting a level of resistance here at basically 4,400, and on the S&P. So we'll see if these levels can hold. I'd like to see us get into another buy signal here in pre-market, and then we may push to higher levels and see if we can get our 4-hour chart above the 4-hour 21. Then we can focus on getting that that hold, or what what I call, or what they call a hold, which is a close above the high day. So if we can get this candle to close above here, then we've pretty much erased yesterday's carnage. And um, so would I jump in right at the open here this morning? No, I would not. Uh, Most likely, this is why I call it. So this is trading. Trading will be, for me, most likely I will be sitting on my hands all day. Now on my SPX trade, I jumped in here. If I get a level up in here, trust me, I will jump out, and and I'm looking at a 70% profit on that. And so if we can hit the 70% profit, we're already about 60% profit as of right now. So if we can pop up here, we can get 75% profit. I will take that profit and run on that contract. And then I'll sit on my hands and see if we get a close above this, and then we will pick up another SPX contract probably, and we may just go one contract on that if we do get a close, and we will see where we go from there. You know, so I'm looking 7 DTEs, but looking for pops, and only planning on being in that trade for maybe 24 to 48 hours, and get out with profits on this market here. So I will not be holding any of my trades for 7 days, but I do that just in a market like this because it gives me the gift of time. The gift of time in case I'm a bit off. I really believe that the worst is behind us. We may still go lower, but I do not. I don't think we'll get the flush that we saw yesterday. That was just something else. Oh, that was just huge. A lot of selling. So I think a lot of buyers are going to be coming back in, and we'll hold this key level here. So this should hold as a very strong support level for the S&P. Let's take a look at the Qs. The Qs also look pretty nasty. I put in some new key levels on the Qs, some retracement levels, and yesterday I talked about, we were just below this level here of 15,265 yesterday, and I said, I said we were probably going to be going to the 15,000, and so and I said, we would want to hold that 15,000 as a key level. We broke through it yesterday like it was nothing, just like I said in the beginning, kind of like a hot butter or hot knife cutting through butter, and it just flew by. And then this was the last 15 to maybe 20-25 minutes of the market close yesterday. It came back up, it closed just below the 15,000 mark here, and then we've pulled up above that. We are sitting right now at the daily 50 on the Qs. So I'd like to see it hold this level, and then we see where we go. While we've been talking, we've gotten a little bit of a spike here on our VIX, and so yeah, let's see. I'm going to close in on the VIX here just a bit. So we've got a little bit of a spike here to 23.28 on the VIX. So I'd like to see it hold this level, and not pull back. Actually, we want to see that drop. So that's this has me a little concerned right now, because I would have liked to have seen. I'd like to be seeing some more. I'd like to see the volatility drop. If the volatility stays up here, then this little spike here just might be very short lived. And so we'll see what happens at the open. And so with that being said, guys, I'm going to cut it off here. Not going to take a look at any stocks or anything like that. I just think right now, we've really, this is an area to be cautious, and we want to see the volatility pull back and maybe pull back below the 20. And if we get to this pullback in the VIX and go below got to get below 22, below 21, and then below 20. That's a 3-point pullback. If we can get that on the VIX, then we definitely will probably see much higher prices here today, and we can get back above these key levels here. So we definitely got a lot of baggage to cut through. We've got some resistance we've got to cut through, and so that's what I'm looking at here for today. So there you go. So this is trading. Yes, it is. All right, guys. Have a great Tuesday. If it continues this way, I guess we can call it Turnaround Tuesday. It's not a turnaround yet until the day closes and the proof will be in the numbers. So have a great day trading. Stay on the safe side, and we will talk to y'all tomorrow.